The European Commission mobilized 12 billion euros on Tuesday with a bond as part of the Next GenerationEU reconstruction fund. The proceeds will only be used for green and sustainable investments across the EU. It is the world's largest green bond issue to date. EU Budget Commissioner Johannes Hahn said about this, "The issue is a good start for the Next Generation EU Green Bond Programme. The ambition to make the EU the world's largest green bond issuer is a strong signal of the EU's commitment to sustainability." Well, with a green bond from Next Generation EU, the EU will be by far the world's largest issuer of green bonds. This will provide strong impetus for sustainable financial markets, as well as for financing a more environmentally friendly recovery of the EU from the pandemic. So, Budget Commissioner Hahn said, "Our future is all about environmental protection. We must by no means let this opportunity pass, and we must expressly point out to investors that their funds will be used to finance a sustainable recovery in Europe." With a high oversubscription rate and the excellent price conditions, Tuesday's issue is a promising start to the program for green bonds within the framework of Next Generation EU, which is expected to raise up to 250 billion euros by the end of 2026. The 15-year bond due on February 4th, 2037 was oversubscribed by more than 11 times, and the order books exceeded 135 billion. A wide range of investors have expressed interest in the bond. The issue followed the adoption of the Next Generation EU framework for green bonds, which took place at the beginning of September this year. The framework is fully in line with the International Capital Markets Association, the ICMA principles for green bonds, a market standard for green bonds, and gives investors the assurance that the funds raised will actually be used for green investments. The Commission's reporting on the use of the proceeds and the environmental impact of expenditure funded by Next Generation EU green bonds will be subject to independent scrutiny. The funds from the issuance of green Next Generation EU bonds are used to finance green and sustainable spending under the Development and Resilience Facility. The eligible investments from the already approved plans include, for example, a research platform for the energy transition in Belgium or the construction of onshore wind turbines in Lithuania. At least 37% of all recovery and resilience plans must address green change, with many member states striving to go beyond this target, and some even by far. This is the fifth syndicated transaction since Next Generation EU financings began in June 2021. In addition, the Commission held the first auction for Next Generation EU bonds at the end of September. Thanks to these transactions, the Commission has so far been able to raise funds for long-term financing amounting to 68.5 billion euros through bonds. In addition, the Commission has so far issued so-called EU bills worth around 14 billion euros after the start of the auctions for EU bills in mid-September 2021. In the financing plan published in June 2021 and updated in September 2021, it was announced that the Commission expects to raise around 80 billion in bonds over the course of 2021, to which short-term EU bills will be added. As the Commission announced in its detailed issuing calendar for 2021 in September, it plans to carry out another syndicated transaction by the end of the year, probably in November. In addition, the Commission will regularly auction EU bills and bonds. Next Generation EU is a temporary development tool with a volume of more than 800 billion euros, with which the recovery of Europe from the coronavirus pandemic is to be supported, and at the same time, a contribution to the building of a greener, more digital and more resilient Europe is to be made. To finance Next Generation EU, the European Commission will raise around 800 billion euros on the capital markets on behalf of the EU from now until the end of 2026. Overall, this results in a credit volume averaging around 150 billion euros per year. In order to raise the necessary funds under the best possible market conditions, the Commission has started to implement a diversified financing strategy. This strategy is based on a mixture of long-term and short-term issues via syndicated formats and auctions, which enable the Commission to mobilize funds flexibly and on the most favorable terms under the prevailing market conditions. And I'll see you in my next video. Bis gleich.